These talks are brought to you by Claritax Books and are proudly sponsored by Six Forward Capital Allowances.
Welcome back to our series of talks on capital allowances. Today's talk is concerned once more with annual investment allowances, or AIAs, and I'm going to look at half a dozen pitfalls and planning points, all adapted from my capital allowances book. So first, let's pick up on the theme from our last talk relating to the transitional rules for AIAs. The timing of expenditure is going to be particularly important over the coming months. Take a company that draws accounts up to the 31st of March 2016 and that's planning to spend £400,000 on plant and machinery. Now, if it spends the money before the end of 2015, it can claim AIAs on the whole lot. If it waits until April 2016, it can claim AIAs on £200,000, but if it spends the £400,000 in the first 3 months of 2016, its AIAs will be restricted to just £50,000. Forward planning is definitely needed here. Point 2. For leased assets, there's no general restriction on claiming AIAs. This is in contrast to the position for first-year allowances, which are not allowed for leased assets. Point 3 concerns the potentially confusing legislation relating to AIAs and pre-trading expenditure. Section 12 of the Capital Allowances Act tells us that pre-trading expenditure is treated as incurred on the first day of trading. Section 38A4 then tells us that the effect of Section 12 is ignored in determining whether expenditure is AIA qualifying expenditure. Now, that was critical when the AIA rules were first introduced, as it ensured that AIAs could not be claimed for pre-trading expenditure incurred before April 2008. For other AIA purposes, though, the normal pre-trading rules apply. So suppose that a company bought a property in November 2014 with a fixtures election showing qualifying expenditure of £1 million. For simplicity, let's say that the company started trading on the 1st of January 2015 and spends a further £600,000 on plant or machinery during the year to the 31st of December 2015. For AIA purposes, the whole £1.6 million is treated as incurred in 2015, so the maximum AIAs on the whole amount will be £500,000. Point 4. As a simple issue to follow on from the last point, it will be essential to divide the costs between integral features and other plant or machinery. The AIAs should be allocated as far as possible to the integral features or other special rate expenditure, so that writing down allowances are available on the remaining expenditure at 18% rather than just 8%. Point 5. No AIAs can be claimed for the period of cessation of a business, and this can be a consideration for a business that chooses to incorporate. Suppose, for example, that a partnership spends £400,000 extending a care home, and at the year end the business is incorporated. No AIAs will be available for that period. This was brought out in the 2014 tribunal case of Kiel v HMRC, where the tribunal ruled that the unincorporated trade ceased in the scintilla of time before midnight on the 31st of March. And the company's trade began the following day in the scintilla of time after midnight. Now, in practice, it should be possible to end up with a satisfactory outcome, but the principle remains. Point 6. Another matter to be clarified in recent tribunal decisions is the rule that a partnership can only claim AIAs if all the members are individuals. Now, this is spelt out pretty clearly at section 38.3, and the Hordwheel Farm Partnership case confirmed the rule, even though it was argued that the corporate partner was dormant. So, no AIAs can be claimed for partnerships with corporate partners, with trust partners, or even with partnerships as partners. Next week, we'll look at some more planning points, broadening the scope to cover first-year allowances and writing down allowances. Thank you for watching. I'm Ray Chidell, author of Capital Allowances and of the A to Z of Plant and Machinery from Claritax Books. This talk was sponsored by 6Forward, an independent property tax consultancy working with accountants to enhance capital allowances for their clients.